Good afternoon, everyone. We're just gathering at the moment, so I'll allow a couple of minutes for just a few more people to join, and then we'll make a start. Okay, we'll just give it one more minute, and then I'll begin. Okay, good afternoon, everyone. I'm Sacha Dhamani. I'm chair of the IFA's Mortality and Morbidity Research Committee, and I'm delighted to welcome you to this latest webinar in our series of events that are looking at longevity in the post-COVID world. We're not quite there yet, but that's the world we're looking at. Today, we're going to be talking about care, and I'm delighted to have three excellent panelists joining me to discuss this interesting topic. And so in no particular order, I'll just do a few introductions. This is where I have to remember whether I've even loaded up the bios. So first is Sue Elliott. Sue has worked for a number of companies in the past, M&G, Reinsurance, Swiss Re, Watson Wyatt, just retirement, MetLife. She has retired in 2019, just in time for the pandemic. So it's obviously been an interesting couple of years from her point of view, but has continued her work with the IFA. Throughout her career, she specialised in income protection and long-term care. Her long-term care work included co-authoring several publications such as Long-Term Care Insurance, a guide to product design and pricing, Long-Term Care, a review of global funding models, and a short article, Long-Term Care, the Next Generation, for which she won an award and some plagiarism rights, I'm sure, from Paramount. Sue chaired the Health and Care Board for several years, as well as participating in many working parties. She has now joined the new Long-Term Care Working Party that has been formed by the IFA, which is focused on social care reform and responding to government initiatives. So thank you, Sue, for joining us. We're also joined by Tom Kenny, who is an actuary who currently leads the pricing and underwriting area of Just Run for retail products. So in particular relevance are the immediate needs annuities that Just provide. He's a former chair of the IFA Long-Term Care and Pensions Working Party, which published several papers on how the previous version of the care cap would affect care funding needs and how those needs could potentially be met through insurance and saving solutions. And well done if you spotted the Freudian slip. And last, but by certainly no means least, is Daniel Ryan. He is an epidemiologist and digital demographer, and led a multidisciplinary research team at Swiss Re, Willis Towers Watson, and looked at many diverse areas such as forward-looking risk models, behavioral science, and the rapid development of digital ecosystems in insurance. He has been involved in developing long-term care solutions since 1998 and helped establish ElderShield with the Ministry of Health in Singapore. So we should have a very interesting discussion and lots of ability for you to ask the difficult questions. I'll try not to be too difficult. Be kind to the panelists. So as I say, our focus for today is on care, and we'll be considering the challenges facing the care industry, the role that the insurance industry can play, and the importance of care as a determinant of mortality improvement. But before we begin, it's probably worth outlining by care, we mean the full range of provision, from domiciliary care to full nursing residential care. And whilst we recognise that care can be provided to people of all ages, our focus is predominantly on the over 80s where care needs increase. So what we'll be doing in this session is I'll be asking the panelists for their views on a number of questions, but we'll hopefully have time for questions from yourselves at the end. So there should be a questions button somewhere near the bottom, and so you'll feel free to put your questions in during the session, and we'll try and get through as many as we can at the end. So without further ado, I'm going to start by asking Sue, how is care currently funded, and what are the challenges in the current funding model?
Well, currently in the UK, public funding is very, very limited. It's means tested, and the amounts the means testing and funding is not keeping up with the growing population and is severely underfunded. The private provision or self-funders are the bulk of the funding. And a lot of people do that through the sale of their house. It might be a dip into their pension pots, which, as we all know, pension pots are decreasing. So the challenges that we're facing is that the population is getting older and the funds are of limited, or at least government funds are limited. And we know that there's potentially additional ones coming for health and social care, but how much of that is going to go to social care? So, and I think one of the biggest challenges is having some clarity as to where the funds are going to come from, how they will be split, and how sustainable they'll be. So, Tom, do you have anything to add on that?
Yeah, thanks, Sue. Yeah, I mean, I would say before you overlay the lack of funding or the insufficient funding in the system, you have to just look at the demographics and see that, you know, the over age 85 population, which is where most of social care needs come up, is one of the fastest growing segments of the population in the UK. I think it's projected to grow by 78% by 2042, which is a massive increase in the population, which will directly impact the level of care needs in the UK. I think the Health Foundation forecast that over the next 10 years, there needs to be like a 55% growth in social care staff just to meet the needs of individuals with social care needs. The other thing to point out is the current system is very complicated. It's fragmented. You know, each country in the United Kingdom has its own system. They have similarities, but England, Scotland, Wales, and Northern Ireland all have different systems. And then within each of those systems, they're quite complicated. So trying to navigate those systems is very difficult for the individual. So when you overlay means testing and then potentially the care cap, and, you know, the confusion around, well, what's the difference between healthcare and social care? It's incredibly difficult for people to find their way around the system and to make sure they get the right level of care. And one of the things that I saw quoted was that Age UK estimated that about 1.5 million people currently don't get the level of care that they need, which is obviously not a good place to be in, you know, one of the largest economies in the world.
So lots of difficulties there. Dan, can I ask you what government action has been taken to address this challenge and what issues still remain to be resolved?
Yeah, so I mean, there's kind of obviously a multiplicity of different actions that could and have so far been taken. I mean, clearly, both Sue and Tom were referring to recent developments, or relatively recent developments, in terms of putting in place a supposed cap on the level of personal care costs or healthcare costs that would be a maximum that people have to pay out. And that obviously moves forward slightly the debate in terms of, therefore, what additional costs do people have to meet. But the challenge really within all this is twofold, really. One is the data, and the second is the difficulty of actually assessing what the level of care that's actually needed is, and how that changes over time, and how that can actually change quite dramatically and quite quickly. So on the data side, I think government has put in place a number of pieces in the jigsaw, which I think make a significant difference, but are still in the early stages. So the effectively building on from the type of a data dashboard that we had for COVID, the idea of trying to get more and more of the data which individuals need to understand their care, and for those who are looking after them to understand care related to medications, and indeed a variety of different activities. We're moving down a path which will have a very significant impact, but we are only at the early stage, and we talk more about that later on. But I think in terms of the fundamental level of funding that's being provided, there is an obvious challenge here where figures that are quoted actually cover a multiplicity of various different activities, whether it's NHS general, whether it's dealing with COVID, etc., as opposed to that which is required for adult social care. And the true levels of cost are very rarely actually stated boldly, and in terms of what that means to the individual and their families. And given that 1 in 4 of us will require long-term care at some point in our lives, and maybe more as we go forward, then clearly stating that level is very important, and we don't do anyone any favours by effectively trying to make out that it's a smaller figure than is necessary. So I wouldn't want to grade it, but certainly when it comes to certain dimensions, we're in the foothills, and much needs to be done to actually address these challenges.
Cool. Thank you, Dan. So what's your thoughts on where the government is in terms of what it needs to do?
Having been here in the UK now for 25 plus years, all of this is so similar. Not much has moved on since I came here. Things have been tossed into the long grass. I don't know how many times. We all know about the Dilnot report in 2011, and the things that have been proposed through the new government, or through the government now. It sounds very similar to Dilnot, with a cap, focus on the increasing the means test, etc., and integration of health and social care. It sounds very, very similar to the Dilnot report. And having reviewed some of the commentary about the responses to the government proposal, there's concern that it's less generous than was expected. And there's a risk that the NHS actually swallows up the bulk of what's being proposed, leaving very little for social care. So that needs to be tested. And I think what it means is that future increases in the health and social care levy seem very likely. So I know it sounds negative, but been following this for so long, and it's I would like to see a solution to this. I really, really would. And I'm sure Sue Andrew Dilnot is pleased that things are back on the agenda again, and it mirrors a lot of what he was saying in his report. So I just hope something comes to it this time around. I'll get off my bandwagon. Sorry.
Absolutely. It's a slightly switching tack. In the first part of the last decade, we saw mortality fall from the highs that we saw in the previous decade. Specifically, the levels of reduction were most significant or most evident at the oldest ages. Do you think this was related to the delivery of care? And what do you think was the cause of this? And I'll put that one to Dan first, if that's okay.
Yeah, no, absolutely. So I think there were a couple studies, particularly in 2015 and some thereafter, which tried to explore this in some detail and came to the conclusion that whilst there are many factors, one significant factor clearly was I'm not sure if I'd use the word delivery, but it was the totality of how care was being provided. and people's awareness of that, and often it's the disjuncts. It's the points where either a switching between carers or where things are missed, and that's entirely natural that it would happen. But that's the maximum area of risk for frail individuals, and so undoubtedly that has been a significant issue, and I think it's only intensified as we have gone through into later part of the decade and indeed into this decade. Because in essence, this kind of fragmented nature of social care that Sue was describing exacerbated, and I don't want to jump on ahead too much to kind of the general consideration of 2020, 21, 22, but generally this fragmentation has undoubtedly led to those who are most vulnerable and most frail suffering. But I wouldn't want to overstate that we have clarity that's an issue and everything else is fine. But I would want to point out that this continuity of care is a problem and is increasingly a problem and will become a greater problem as we have greater strain on workforces and we have greater strain on the infrastructure where people are receiving care.
Tom, what are your thoughts on this question?
Yeah, I mean, I support what Daniel said. I think I'd go back to the point I made earlier, Sacha, around the level of funding being insufficient to enable people that have care needs to get the support they need. And I can't point to any data to say like it's clear, but one would have to think that if there is a large part of the population not necessarily getting the level of support they need, and they have a care need, then it exposes them to more risk of having a fall or some event that means that they potentially need medical care, and then that's not received soon enough, and that has an impact on mortality rates. So I've got to think that the insufficient funding is possibly contributed to it.
As Dan mentioned, let's jump forward 10 years. And Sue, can I ask you, what's been the effect of COVID-19 on care? And coming out of the COVID-19 pandemic, what do you think the biggest challenges are facing the care industry?
Okay, well, focusing first on the impact of COVID, we all know of relatives that we haven't been able to see in care homes because of restrictions. That's lifting now. It's been very, very difficult. And the care industry was suffering even before the pandemic started. They didn't have enough care providers, etc. And this has been exacerbated by COVID-19, with some care homes having to shut down through lack of funds. And then care providers, reduced number of care providers either being off ill with COVID, etc., etc. And what would have happened if there was the mandatory vaccine requirement for the care providers? It needs to be thought of holistically, and the response to COVID. The social care side of it needs just as much attention as the NHS side of it, as to response to COVID-19, how we take it forwards. And it's going to take some time, I think, for the social care industry to actually respond to it. It's, as I said before, they weren't in a great state to start with before the pandemic. And they've responded very, very well to the challenges. But it's left them very, very tired. And I say they've done a brilliant job, but they need more support. So it's, I'm speaking primarily about the care provision in that, and I know there's lack of funds, etc. But I think the actual care side of it has probably suffered the most because of COVID. Yeah.
Dan, what are your thoughts on how COVID-19 has affected care?
So I would echo all of what Sue has put forward, and I think it's very important. I suppose there have been some developments which provide some hope. One relates to the fact that the care homes as a group are now more connected. and more visible and better linked digitally than was the case before. You remember in the early days of the pandemic how actually there was almost complete mystery as to exactly what's happening in the care homes, and whilst at the same time we had very good visibility in the hospitals. And over the period, that connectivity has helped in terms of PPE, it's helped in terms of capacity for care homes to take patients back to the care home. And the tracker, I think, has been positive. At the same time, exactly as Sue says, this is a time when workforces have been extremely strained and extremely stressed. And although there are benefits to having this greater data available in terms of maintaining and achieving the best level of care, that data has to be entered and that data has to be maintained, and that has additional cost and additional time. So, and then maybe the final point, as Sue is intimating, we're talking about an industry where many care homes were built a long time ago and require significant funding to kind of get to the standards in terms of infrastructure and setup that maybe some of the newer ones do. And this is all happening at the same time as more requests for kind of isolation or segregation, and more requests for kind of testing and PPE. So it's an incredibly difficult period that these care homes are having to go through. But I do like to think that there are some elements of the steps that were taken that mean that, for example, the care homes are more resilient to future pandemics, particularly influenza flu. That must be something which going forward will be better handled and with less impact and more lives saved than would have been the case before. I mean, it seems a very strange positive outcome, but it is a reality that we have seen very low flu seasons for the last 2 years.
Thank you. So let's bring this slightly close to home for us as practitioners. What does the insurance industry currently do to provide assistance with care funding needs, in particular what financial products are available? And I will ask that question of Tom. Tom, can I ask you that question?
Yeah, sure. Yeah, thanks, Sacha. So I think the first thing I would say is fairly limited. Like if you look at the level of funding needs, which are somewhere around 20 billion a year, I would say that the combination of all the products I'm going to mention is a fraction of that. But I'll talk about that now. So as Sacha mentioned, I work on immediate needs annuities. So that's one product that's out there in the market. It's offered by a number of providers. It's effectively an annuity that's bought at the time of need and just protects the individual against longevity risk, effectively gets certainty of what their funding costs are going to be. And usually it's the family members that take that decision, but at least it means they know how much money they need to set aside for their loved one's care. And they can be used for either care setting. It's usually for people going into a residential setting, but they can be used for domiciliary care. So that's one product, pretty small, I'd say, in terms of how much money goes into it. There's no market stats out there, but it's probably around the £200 million mark a year. So again, put that against the 20 billion, it's quite small. Extra release mortgages. I also work on those, and there are a number of lenders in the UK that offer extra release mortgages, and they are commonly used to supplement financial needs in retirement. Obviously, care needs are one of those in retirement, and we quite often see people borrowing money to make alterations to their property, so that's quite common. The whole of the extra release market is about £4 billion a year, and only a small proportion of that is going towards meeting care needs. And then the other part is some providers offer riders on whole of life insurance policies where there's an acceleration of the payout if the insured life has an eligible care need. So those are the products available at the moment. there have been sort of pre-funded products in the past, but that they're not really available at the moment.
Sue, can I ask you to sort of expand on anything that Tom said?
Just a couple of things from the past that may be looked at again in the future, but potential link to pensions. But the issue there is that the pension pots are reducing in the current economic climate, so there probably wouldn't be a lot of extra money for care funding. This is one of my favorites, given I've worked in income protection as well as the linked income protection, where you have basically a whole of life income protection policy where the definition of claim changes from an occupationally based to ADL or cognitive impairment at retirement, which I think it would cover all of your disability needs throughout your life. That has not happened, but I think it's worth exploring. I think that covers all of the different potential products that would be available, other than riders here and there. I know Tom, Daniel, and I discussed about a potential respite care type of benefit for care providers, given if a care provider has COVID, okay, can they get some type of coverage, or can there be some type of locum coverage for another care provider to come in? Something like that we need to sort of think outside the box as to what's happening in the current care environment. And those are my thoughts, just in addition to Tom's.
I'm just sort of harking back to what Tom mentioned in terms of 20 billion versus a couple of hundred million. It seems like there's quite a gap there. Dan, do you have any thoughts on what we as the insurance industry can do to assist with this problem?
Sorry, microphone off there. I mean, fundamentally, this is, as I say, an outcome or likelihood that's going to affect a much higher percentage of people than we'd like to think individually or collectively. So anything that we can do to encourage people to think proactively about the future, intergenerationally if necessary, can only help. The one thing maybe I might add on to that, which Tom and Sue were kind of going through in terms of current offerings, is kind of an increased flexibility in terms of what we are able to provide in terms of supporting domiciliary care. So in addition to what Sue was talking about on respite care, the reality is that if you have domiciliary care, it is going to change quite significantly from day to day in terms of the level of support that's needed. And it doesn't have that constancy that one might expect in a residential nursing home. And to the extent that insurance products can support that level of flexibility, whether it's funded, I know there are lots of innovative kind of thoughts in this direction, but the extent they can support kind of a flexibility of care delivery and a flexibility of care delivery based on need rather than assessed level of disability is actually something which is not only helpful to the individual, but incredibly helpful to their families, and indeed helpful to those companies that are trying to support domiciliary care. And one of the challenges we referred to earlier on in terms of staffing, whilst the situation is very difficult in terms of care homes to get necessary staff, it's even more difficult for those in domiciliary care to actually support families who would like to or are able to go down that route. And it's like so many other areas of healthcare. If we're able to provide that care at that level of an intensity at home, it does delay or prevent much greater levels of intensity in care in care homes or hospital, and indeed prevents very serious kind of consequences might develop because the individual is kind of not receiving that level of attention. But I think underlying all this is the clear statements of the level of funding that are required across society, and therefore anything that insurance can do to promote people's mind in thinking that way, and the different pots that Sue was referring to that might be available to support it, that can only help that gap that Tom was describing.
And Tom, return to you. What would you like to see the insurance industry doing to bring forward new products or otherwise to help?
Yeah, thanks, Sacha. I think the challenge is offering something that people want to buy, because it can be very expensive. Some of the solutions that we might want to offer. As I mentioned earlier, like one of the issues with the system, and I don't think that's going to change even with the changes that are being made. It's incredibly complicated to navigate, and a lot of people that are having to navigate it are still working. They've got a full-time job, and they're having to navigate the system because their parent is going into care or has a care need. So I think I can see more happening in terms of the insurance industry providing access to services and that help them navigate the system. I think one or two providers offer a sort of care concierge service now, and you can also see that perhaps there might be mini income protection type products out there that just are offered as an employee benefit, where the employee can take a small amount of time off to look after their loved one whilst they're trying to navigate the system, because it's usually it happens very suddenly. I know mum, dad has a care need, I need to help them, and you have to take off a few days and help them get the care they need. So that sort of thing I can see being very affordable, but it isn't currently well covered at the moment.
And again, does that come down to what Dan was sort of highlighting, as from the lack of awareness perspective?
Yes. Lack of awareness, and I have to say, I think because as we've all been saying, it kind of changes the care system have been in the long grass for the last few years. There hasn't been a huge amount of innovation going on because you kind of want to know what the system you're dealing with. But I think the clarity that we now have should help more providers say, well, let's do something with this new system and support it.
Excellent. Okay. So in terms of sort of the future development, let's see if I can ask you, what can we learn from other countries? How are other countries delivering care, and what models exist over there that we could borrow or exploit?
Yeah, there's a lot of variation across the globe between the split of public and private funding. There are some countries that have got 100% public funding, and then you get to the UK, where we've got the bulk of it is privately funded. Some of the key systems have been through the US, where they've tried public-private partnerships with dollar for dollar or time-based. They've had very limited success on that, even though the US is an insurance buying public. Japan has seen some success, as has France, but they've had some government-backed educational efforts to promote private long-term care insurance. So what I've tried to do is to pull together the key enablers. As part of the new long-term care working party, I'll be leading the stream to update all the global funding models, the key global funding models. But the key enablers that I see that any funding model needs is, we've said before, create clear roles for private sector and public sector. And I know Daniel and Tom have alluded to that. To educate the citizens on the true value and costs of long-term care. I think Tom's mentioned that people just don't realize how much it's going to cost. Provide real financial incentives. Do we have some tax-based incentive? Haven't seen that. And be innovative around the delivery model for it. But I think that any model, it needs to be sustainable in the long run, and look at the demographic picture well into the future, because it needs to go through multiple governments, because we're not going to have one government forever. And if there is a sustainable model, as Tom's alluded to, that it'll encourage a private insurance market to grow. So I've not talked specifically about different countries. Each country has their own issues. It depends on how much is public or privately funded. But the messages are the same for any model that you're trying to develop. I think the key thing is clarity between the private and public sector. As Tom said earlier, that we have some more clarity from the government as to can we now develop products around that, but time will tell. Yeah, lessons to be learned, but it's the same lessons I think that we all can take forward. Don't know, Thomas, do you have anything to add on that?
No, I think you've covered it well, Sue.
Thank you.
Dan, I mean, this is something you've sort of talked about and written about in the past, continuing care retirement communities and other sort of forms of sort of alternative models. You know, are there any sort of examples like that, or, you know, sort of that one in particular that you can sort of elaborate that might be useful in the UK for us to exploit more?
Yeah, and certainly the generalized concept of continuing care retirement communities, effectively communities where care is provided along a continuum and individuals can move as needed, does avoid a lot of the issues that we've been discussing of discontinuity and disruption and distress for obviously both the individual and the families. But, you know, the challenges obviously in the UK are, you know, to be blunt, land value, and also the lack of history there has been of running such type of communities that we see in places like not only the US but, you know, Australia and indeed further afield. I think what's really interesting as new potential developments, and this is maybe another thing that's come from COVID, is the increasing levels of comfort with effectively remote monitoring and effectively trying to develop a virtual care home, if you will. I mean, certainly there's been a lot of experimentation with developing virtual wards where effectively people go home and are monitored by nurses and doctors in the recovery phase, therefore providing effectively acute care for those who urgently need it. And a similar concept of kind of providing that virtual levels of care, I mean, clearly has been explored in places such as Singapore, but also in China quite a lot. And it's all about quality in that if all you have is someone who looks in occasionally to see how you are, that's a very different prospect to actually being in a care home and being looked after and regularly monitored. However, you know, if through devices on you, wearable devices or devices within the room, you're able to get that totality information, and you have literally a kind of an army of individuals who can go and provide immediate care or slightly delayed immediate care, then you start to open up the possibility that we're not just wedded to a model of, you know, individuals in care homes, residential nursing, but potentially a variety of different locations. And the question is really going to be, do people want that? Is that something where staying at home and surrounded by that virtual remote monitoring environment, does that actually mean that they live longer and help more healthily, in the same way that we saw with the continuing care retirement communities, that actually a number of the early American CCRCs went bust because people were living much longer than expected. A great success for the individuals, not so much so for the CCRCs. But at the same time, we have to recognize who is the ultimate effectively provider of care in that situation. So if the remote monitoring leads to someone meant to be coming to see you, but they don't come, then is that actually even more disruptive to the family member, usually, unfortunately, the daughter or daughter-in-law, who has to come and drop what they're doing and provide the care without knowing how long that will be. So I think technology does provide us with new forms of providing care in remote settings, but it's only through experimentation and testing it out and effectively developing a genuine integrated system that we might find the true value behind that. But I mean, I personally, There have been a number of companies. Emerald was one of the first ones. Docio is a more recent one on the virtual wards. It's astonishing the level of information they can detect. I mean, it's not just kind of like, oh, they detected that you fell over and you didn't get up again. Important though that is, it's the ability to kind of remotely detect breathing rates and heart rates from the sensors around the room because of their sensitivity. And that type of comprehensive picture obviously means that where you're living has to be up to a certain level of standard to be able to take that level of feed in terms of your internet connection, etc. You can't just rely on some antiquated modem that dates from a previous decade. So greater possibilities, but potentially still to be tested as to exactly what difference it will make to the overall delivery of care across the UK.
Yeah, I remember reading a few years back about the idea that there could be robot companions to people who are, at the oldest old. So, Tom, are there any sort of more far-reaching innovations that you look to see if there could be some sort of breakthrough in terms of care delivery? Or do you think it still will always come down to people and being in a care home in the end?
No, I don't think so. I mean, I think certainly from the conversations I've had over the years on this, most people recognise that most people want to stay in their own home for as long as possible, and I think technology is going to facilitate that happening potentially for the rest of their life. So I think the monitoring that Daniel's mentioned is fantastic, and robotics, yes, certainly I think that will have a place. Do people still want to have human contact? For sure, but I know you can get, even if that's remote, through this type of technology, but people are being able to get it on their TV so they can speak to loved ones in their home. But yeah, I still think people will want someone to come in and take them out, but certainly think technology will revolutionize domiciliary care provision, and probably will be the one thing that can really help solve some of the funding, because it's obviously a lot cheaper to provide care in the home than it is in a residential setting.
So you got any other thoughts on that one?
I really like what Daniel has described. It sounds like a Fitbit house that monitors everything you're doing. Yeah. And I think it's a great idea. And I agree with Tom that I think given what's happened over COVID and the pandemic, people in care homes and their family members have got used to, it's sorry to say, but Zoom calls, they've got used to technology as a way of communicating. So I think the advancement of technology will be the way to go. And I think the people will be more receptive to it just because of what we've been through.
Yes, I think that's right. I mean, sort of COVID-19 has been massively disruptive, massively awful, but there are undoubtedly going to be innovations which will help in some places, and this could be one of them. Yes. So prepare yourselves. I'm going to ask you the tough final question. And Tom, I'll let you know it's coming to you first. Is how do you envisage care changing over the next 10 years? And how do you think those changes will impact mortality improvement at the oldest ages?
So I'm an optimist, I'll have to say. So I think with the anticipated changes in funding, with this health and social care levy and the care cap, that will increase the amount of funding going into the system. I also think that there'll be more insured solutions provided. I think there'll generally be greater awareness of how the system works, so people will make better provision for these potential needs. And I also think, as we talked about, technology will mean that the quality of care that can be accessed for the amount of money that's being spent will be better. Or if you put all that together, then I think the quality of care will be better, more people have access to it. So I'd like to think that will mean that people live longer and mortality improvements increase at the older ages faster than they have more recently. From a societal point of view. Obviously, from an insurance company point of view, maybe that's a different thing. But
it doesn't matter as long as we get it right.
That's right. That's right.
Sue, what are your thoughts?
I am really pleased about what the government has proposed about the increase in funding, etc. My only concern is it enough? I'm sure they're going to have to go back to us again for some more money, but it's a step in the right direction, which I think is great. I think it's going to take a few years for the care industry to recover from COVID. There's been a lot of lessons learned. There's been changes in behaviors. We've talked about the use of technology in that, which is great, but it is going to take some time. I think this is probably the most positive I've felt about care funding since I came to the UK. This is being recorded, isn't it? Yeah, I did say that. The fact that the government actually came out and said something about it, as I said, I do have concerns. It may not be enough, but if they're going to deliver that, it's a step. It's a step in the right direction. So those are my thoughts.
Can I just sort of expand on that one? I mean, so increase in national insurance. So that's a increased taxpayer contribution. Do you think taxpayer-based solutions are the way it will probably go? Do you think it will be an encouragement more for a private insurance-based solution? Which direction do you think we'll go in?
I think long-term national insurance increases is not sustainable. They're already having issues with this increase coming through. From an insurance background, I think there has to be some type of partnership between the public funding and the private funding. So I know I'm kind of sitting on the fence here, but I'm Canadian.
I mean, I think the challenge with insurance solutions is that, and long-term care, social care, is that people don't really want to put money aside for it, and by the time that you need to put money aside, it's too late.
Too late, yeah.
So
exactly.
I think unless it's compulsory, whether it's taxation and funded through the state or compulsory private insurance, I kind of can't see how it will work personally. But I agree that it could be, because some countries have gone down there. It's private insurance, but it's sort of strongly incentivized. Either of those work from my point of view, but I think people have to have a very strong nudge to do it.
And what do you think is going to happen for care over the sort of next 10 years? And, then sort of put some sort of not quantification, but a qualitative assessment of mortality improvement, if you would.
Yeah, no, I think, start with the endpoint. I think it's going to, a variety of reasons, we're going to lead to a significant increase in mortality improvement at the older stages, assuming the following happens, and that really predicates around what has set up as a relatively institutional approach to care, which although individuals are working flat out, and there's no doubt about that, the visibility of the data connectivity means that it can be highly inefficient from the perspective of the individual, and onerous from the perspective of the carer. And I think, this is not like other parts of medicine where you identify someone has hypertension, you work out what the level is, you titrate what the medication should be, and then that person's managed. A lot of this is very labor intensive and very different from moment to moment. And therefore any system over time, which means that more of the information on the individual state can be gathered, and therefore lead to a more appropriate plan or more efficient plan, can only be helpful. I mean, right now, I think I'm right in thinking that the average stay in a nursing home, care homes in general, is about 2 years. So, over the period since COVID came about, we have unfortunately lost half of the people in care homes. Leave aside how many happened to die with or because of COVID, half of those people in care homes have died. And so a success would surely be, as I think Tom's intimating, people living longer in care homes, or actually having the opportunity of leaving those care homes because their health has improved. And for some, that may not be realistic, and for others, it might be. And that's one area where I think maybe the insurance could play a part as well. So I think, Tom, you were mentioning, lifetime mortgages. And the basic structure of lifetime mortgage is, if you move into the care home after 6 months, it's expected that your primary residence will be kind of sold, which I think is a reasonable reflection of how things may develop for that individual. But maybe there'll be a group of people where we're able to kind of bring them back to a more domiciliary environment, and that gives them quality of life. Because I guess this is the most important thing for me over the next 10 years is people living longer is not actually a particularly wonderful outcome if they're living in an environment where they may be socially isolated, if they fundamentally from day to day, their patterns and their expectations are very limited. If we can increase the amount of time where they're living in a genuinely enjoyable, connected to their families environment, that's a positive. And if insurers can, through supporting interventions earlier on, through flexibility, or by modifying certain terms like the ability to come back from a care home to a house and therefore maybe not settle the lifetime mortgage quite as early, then I think that would be great. And then we might be in the same situation that we were when the CCRCs came about, when people were living 3 years longer than expected. Now, unlike certain CCRCs going to the wall because they've miscalculated the refundable costs, then there'll be other issues. I mean, pension costs will go up, or whatever it might be. But that would be a good outcome from why we should change it. And I guess why I'm saying this is that one of the things I have seen as a result of COVID is, on the architectural side, new care homes being set up in a totally different way. With that visibility across to other people in the care home, with that ability to kind of connect to people outside through, telecommunications, etc., with greater opportunities to take part in activities, and dare I say exactly like you're saying, the robots. I mean, we've all seen the SEAL robot that was so successful in helping people with dementia. As time goes on, there'll be more robots who are effectively helping with not only physically getting you in and out of bed or physically helping you with certain other functions, but also engaging in a way that is almost impossible for a single individual who has 20 people to look after on a single floor. So if all those things happen, and I think we're going in the right direction, longer healthy life expectancy must be an outcome, and therefore higher mortality improvements. But it is by no means guaranteed that we're going to get that. I can see that without that enthusiasm, we might end up with a continuation of what effectively is a Victorian solution to effectively looking after your individuals towards the end of their lives.
It's almost a positive end, but the caution was necessary there. He wouldn't be an actor if that didn't come through. Okay, well, thank you for answering sort of my questions. I'm now going to turn attention to the questions that are coming through. If you do have a question, please type it in, and I'll let. At the moment, we've got one, so I'll start with that one. But whilst we're answering that question, if you do have questions, please type them in. So here's a question from one person. So they were registering that they were surprised at how many friends and family are assuming that the state will pay. And some are considering in advance of time how to pass on their own assets before the means testing kicks in. Do the panel have similar experiences, and what will it take for those assumptions and behaviours to change? Who would like to tackle that question first?
Yeah, I'm happy to go first if you like. So I think part of it is just the lack of understanding, because quite often people kind of think social care is covered in the same way as healthcare, and you have to say in some areas it's hard to see why, you know, healthcare is completely funded at the point of need by the state, but if you slip over into qualifying as social care, you're on your own. So I can see that misunderstanding. I think there's definitely an education piece, because every time the current government announces changes to the social care system, there's an outcry about whatever they're planning to do, even though whatever they're proposing is a slight improvement on the current system, you know. But there's usually headlines about dementia tax and you know, various different things like that. I think the other point around, you know, how do will people still expect the state to pay, and you know, taking advantage of the means tested system? I think whilst you've got that safety net, it's going to be really difficult to you know, stop people abusing the system. So, you know, at some point you'd like to think that the state funded system, if that's where we carry on going, would be generous enough that people don't end up falling back on the means tested system. There are rules around it, you know. You know, if the local authority finds out that people have manipulated the system, then they actually treat the individual as if they still have the assets, which can get quite messy. But yeah, I think I wouldn't want to see us get rid of the means tested safety net, because that wouldn't be a very good place to be, where you've got the most vulnerable people in society not having their social care funded.
Dan, so anything you'd add to what Tom said?
Nothing from me. No, he's covered it well.
Okay. Whilst I'll give someone an opportunity to ask a question, I can see someone's typing. I will just make a quick plug. I don't get paid for this. You know, I'm not getting commission for this, but one book I would recommend to everyone who wants to understand what happens at later life better would be Being Mortal. I think that's an excellent book for people in this area to understand what's going on, and also a way of finding some optimism about what could be possible. You know, where care is. It's talking particularly about the US, but I think the examples are relevant for the UK in the sense of where care is failing and how much better it could be, and what is possible to, might be to achieve. Okay, so either this is the longest question in history, or it's just a glitch in the system. So I think we'll draw a halt there. We do have a couple of minutes in case these questions come back. So I'll begin by just sort of thanking the panelists for your time and for your excellent answers. Thank you for sharing with me and the wider audience your insight into this topic. Just to highlight to everyone on the call, and you can pass on to your friends, family who would obviously be interested as well, but the recording of this webinar will be available in the future, I think via the website, so that you can watch again at your leisure. We will be having future webinars on various topics. I'm not going to sort of preempt those, we're still sort of running, but if you do have any suggestions about what those topics would be, or any requests for particular speakers, please get in touch via the UK Longevity Mortality Actuaries Forum, which is on the screen, or we did have the question, I'll come to that one in a second, or you can contact myself via LinkedIn, that works as well. Okay, so the question is here, right? So we've got just about time. So there should be a lag between actual funding changes and impact on mortality improvements. How do you think the funding cuts in the 2010s would impact in the next 10 years? And how will the funding increase in the 2020s will impact mortality improvements over 2020s and 2030s? So I think, Tom, Dan, Sue, we've talked about your sort of views of what will happen next. Is there anything sort of related to this question that you'd sort of like to expand on? Or do you think, sort of you've sort of covered these points?
I think all I would say is I think that there isn't that much of a lag, to be honest, because as Daniel mentioned, like the life expectancy is very short for someone in social care. So you can have quite a dramatic impact quite quickly by changing funding from one year to the next. I don't think it's going to be that big a lag, but I'm sure there is for some elements of it. But I think you'd see quite a significant change very quickly.
Okay, so
I'd agree with Tom on that anything the government's announcing that's adding to the funding or any changes is a positive, and it may take some time to come through, but it's got to be a positive.
Okay, so thanks again to the panelists, and thank you to the audience for choosing to join us. I hope the discussion was useful, and we'll see you at the next webinar. Watch this space. Take care. Bye-bye.
Thank you.
Thank you.
Thank you.